Good morning, people in this house. Good day, my entrepreneurs in the East. And how's my entrepreneurs in the West doing? And my people in the North, good evening. How you guys doing? We're still going through winter here in the South. Still winter here in the South. Winter is still upon us. We're soldiering on. We're soldiering on. Excuse me. We're soldiering on. We're soldiering on. Life goes on. Entrepreneurship goes on, and we are still learning as we go. We're learning on the go, and we're trying, we're trying to keep these wheels turning. So life is going on. We are moving on. We are soldiering on. We come across different difficulties and challenges, but we keep going. We keep going. We don't look back. Whatever that or whatever challenge that happens or come our way, we'll keep going. We won't stop, and nothing's gonna stop us. If you want to drop, if you want to quit, ask yourself why you started in the first place. So we are business people, we are entrepreneurs. We wake up not knowing where to go, not knowing what we're gonna eat, not knowing how we're gonna pay our bills, not knowing how we're gonna pay our employees as well. But as long as we are growing and building, eventually these entities that we're building will eventually reach the level where we want them to be, and we grow the entities as well. We buy assets for the entities. We want to see these entities growing. Whatever assets that we buy, let's make sure that we manage the assets effectively, and the assets are giving us an impact in our businesses. We understand even how to manage these assets. So today I want to talk about asset management, because every business that runs fairly well will one or the other own some kind of assets, and these assets need to be managed, and they need to be well managed. If you don't manage your assets well, your business will definitely lose a lot of money through a mismanagement of its assets. So I'm just going to take you through asset management as a whole, as an umbrella actually, and I'll pick here and there around the umbrella of asset management, and then we'll take it from there. In the next 35 minutes, be with me as I take you through asset management, so that you understand that certain things that you don't regard as assets in your business are actually assets that you need to take care of, you need to manage and keep this thing going. So as you take care of our lives, as you take care of our health, we also take care of the entity's life. We also take care of entity's health, through its assets. So asset management. What is asset management? A lot of entrepreneurs are focused on important things of the business, looking into the important aspects of the business and so on. But I have realized and picked up that many of us as entrepreneurs, we overlook or we tend to neglect the asset management part of our businesses. I was speaking to another entrepreneur last week Thursday. We were driving on our way back from somewhere, and I was asking him how many assets does his business has, and he did not know. And then I asked him, what's the worth of your total assets in your business? He did not know, and he was like, "Hey, man, those there's too many things. I can't know all of those things off by heart." And I was worried about that, because he doesn't have employees per se, and he has casual employees that comes as and when they are required. And this entrepreneur does not have information around this entrepreneur does not have information around the number of assets that they have in their business. She also doesn't have information around the total worth of the assets in their business. So it gets worrying that we neglect the most important part of our business, because assets form a very vital and fundamental part of your business. So we're going to talk about asset management in detail, but in a simplest form for a layman to understand what you're doing. You're not going to use or mention big terms, and no, we're going to explain this thing in the lowest level possible for everyone to understand, right? Yeah, so what are assets and how do we buy or procure these assets? Mostly in business, we don't buy, we procure assets. Like I said, I'm going to explain to the layman's level. So if you hear the word asset procurement, you must know the word procurement means buying. You're buying, you're a buyer, you're procuring, you're buying, you're purchasing. Yeah, so what are assets? So assets could be anything that your business spends money on, which is expected to give the business some returns in a way. Anything that your business spent its money on, and the business expects for that particular thing to give some return back to the business. And this thing should be able to enhance the operations of the business. That will be regarded as an asset. If it doesn't do any of those things that I mentioned, it's not an asset. It's a liability of some kind. But I'm not here to talk about liabilities. I'm here to talk about assets. So if your business buys this, for your employees to use when they drink coffee in the morning, this is going to be an asset for the business, because employees need to drink coffee so they become energized and they become productive. I'm just giving an example. So this thing becomes an asset because it's going to give some kind of a return back to the business in the form of labor. If your business buys this, it means this thing is going to be an asset that is going to be used to enhance operations of the business, and the business will see some returns through this asset. So those are what assets are. I'm just giving an example. I can give furthermore many other assets as well, or examples of assets. A vehicle, it's an asset your business is going to use to transport certain goods or transport employees from one point to the next when they want to go attend trainings, because after being trained, the employees will come back and give their expertise back to the business for it to operate optimally and effectively. That is an asset. Another example could be your business buys a motor that's going to run or pump water into the tank which will be used as an irrigation system to irrigate plant and crops that the business will be selling or processing to make jam or whatever with the crops, and then or to make vegetables of some kind and then make revenue from such. So the motor is going to be an asset, the water tank is going to be an asset, the pipes are going to be assets. What other examples can I give? Yeah, you get the point, right? So those are the assets. Now, how do we procure these assets? How do we buy these assets? When you buy your business assets, very important, you don't just go and get to the store that is selling that particular asset and then pay, because the store doesn't know whether you are an independent individual or independent what, or doesn't know whether you are an entity or you're buying that particular thing to use for business, or they don't know. So when you go buy for assets, especially if you are VAT registered. Even if you're not VAT registered, I'll touch base on this in details. You get to the store, you maybe compare your prices, then you decide to buy, then you tell them, I want to buy this vehicle and the trailer and the tank and the motor. Those are 4 assets. And I'm from a business, this is the business details. And then you give them the business address and names and everything, registration number, all the details that are required. After procuring or paying for those assets, the invoices of such assets should reflect the address and the business name, as well as the registration number of the business. And then obviously the invoice is going to show the amount that you spent. The VAT will also appear or be displayed on that invoice. Then you are able to do your VAT input and outputs based on the procurement that you've just made, or the purchase that you've just made. And your revenue collector is able to calculate the rebates around the VAT input and output. I'll make an episode around I think I've made an episode already about the VAT input and output. So just go to the channel and check, or look for an episode that talk about tax. They are all labeled. So there's one episode that talks about tax. You will learn more about VAT input and VAT output. So the VAT input and output difference will be paid back to you, or you will pay the difference to the collector of the revenue. In our case in South Africa, the collector of the revenue is SARS, South African Revenue Service. So it's either they pay you or you pay them, depending on the difference that is made. If the difference is favoring you in terms of output, they will pay you. If it's favoring them in terms of input, you will pay them. So in most cases, South African Revenue Services will pay you because you've paid tax, and you are also charging your customers tax. So procuring an asset, buying an asset, should be done that way. It's very important. In most cases, you'll find a lot of entrepreneurs procuring assets without even telling the store or notifying the store that these are assets for the company. The invoice is just going to come out like it's for an individual. You don't even care about the slips and everything. You keep and record those slips. You record that information. You record the assets. I'll touch base on that a little bit later. You record the amount that is used to procure those assets. All of those monies should be able to reflect on your audited financial statements at the end of the financial year. That will show that the money that the business is making is going into procuring assets for the business. Then you are growing the business. Yes. Then let's talk about asset register. The part that I just mentioned that I'll touch base on, asset register. So after procuring this asset, after purchasing these assets, you take them to your place of work. Then when you get there, they will connect them, whatever, if they need to be connected, if it's a TV, if it's a whatever, they will start using that asset. Before they start using that asset should be registered on your asset register. So the business should have a complete asset register that covers all assets for the business, and each department should have its own asset register. So every month, the department that is managing the assets, asset management department, should be able to consolidate all departments' assets registered under one overall asset register. So if one department has procured a certain or particular assets, they update on their asset register. End of the month, they forward that updated register to the central asset management officials, and then they will consolidate an overall asset register. So every month you are able to see which assets did you procure this much, how much did they cost us, what is the purpose, lifespan, and so on and so forth. So the asset register, it's a complete complete and detailed report, so to speak, of the asset. So if you want to see details of the asset, you go to the asset register. It will show you when the asset was procured. The register should be able to indicate all of those things. So I will detail some of this if they come through from top of my head, so that you understand what's to be included on the asset register. If you're interested in us assisting you with asset register. We do such services. We can assist you to design an asset register for you and train your people on how to populate asset registers, how to update asset registers, and keep your business updated. So your asset register should be able to reflect the date on which the asset was procured, the name of the asset, the type of the asset. Type of the asset, we've got different types. I'll touch base on this after on the types after I'm done with the asset register. You'll understand the types of assets. It will also indicate after the type, it will also indicate that in any no form of sequence or anything, as long as those things appear on the asset register, those are the details that we need to see for each asset. So it will also reflect the value of the asset on procurement, and it will also show your asset register should also show the location of the asset. Where is the asset going to be located, so that when we want to verify that asset, we know where to go and verify that asset. So all assets should be verified once, twice, or 3 times a year. So the asset management department officials should go out and verify the assets physically, that this cab, it's yellow in color, or what color is this, orange, whatever, cream white, it's situated in this office. And then when they go, they will find this cab, and then they will look at the asset number for this cab, and then they will verify if the details of the cab is tying up with what the cab is saying on the floor, live, physically. So the asset register will also reflect the asset number of the asset. Asset number is very important. Every asset should have a number, and then it should also reflect, the asset register should also reflect the asset, excuse me for doing this, it's a bit cold. The asset register should also reflect, I will not do this again, should also reflect the depreciation value of the asset. Every other 6 months or so, the asset should be depreciated. It should show the depreciated, the purchase value and the depreciated value, and it should also show the amortized value. The amortized value, I'll touch base on that as well. It should also show what else? Maybe the color, if need be, you can show the colors. If maybe you're buying assets that are being identified by the colors, you can also indicate the color of the asset. It's a long list of things that should reflect on one asset, you know. If it's a vehicle, it should also show the type of transmission the vehicle is. It should also show so many details that are relevant for this asset to be identified correctly should be included on the asset register. Hence, I'm saying if you need our services, we can come assist you develop an asset register. We've got templates that we use to develop asset registers. That is an asset register, very important. I've done that thing again. I just did that thing again. Sorry. My apologies. Next thing, I want to talk about types of assets. We've got 2 types of assets. We've got tangible assets, which is the first type, and then we've got intangible assets. Tangible assets are assets that you can touch. This is a tangible asset, physical asset. You can touch. Some call them fixed assets. Fixed assets are assets that you can touch, but they sometimes cannot be moved. You know, they are tangible, but they can't be moved, so they'll be classed under fixed assets. You know, and then there's tangible assets that can be moved. They are tangible and movable assets. You know, like a vehicle, you can move. A cab, you can move from one department to the next, from one location to the next. So if it's land is also an asset. If it's land, it's tangible, but you cannot move, so it's not movable. You understand? So that is the first type of the asset. The second type is intangible asset. Intangible assets are assets that you can also move, but you can't touch. You can't mostly you can't see. So it's assets that you can't see, but you can move. You can't touch, but you can move. So mostly intangible assets are movable. if there is any immovable or unmovable assets which is intangible, please let me know. I'm open to understand such assets as well. So I gave an example with tangible assets with a cup. Now, example of intangible assets could be intellectual properties. Intellectual properties are normally known as IPs. So you can have multiple IPs which you cannot see with your naked eye. So an IP is something that you own, which is more like a license that you own, which people cannot touch, but they can hold a paper that determines or tells the type of assets or what type of IP this is. So we've got different types of IPs. We've got copyrights, we've got patents, we've got trademarks. You can have such IPs and they become assets to your business, and you'll be able to put them on your asset register and then be able to amortize them, because intangible assets cannot be depreciated but amortized. What is amortization? I'll touch base on amortization and depreciation after this. So I want you to understand the difference between tangible and intangible. So tangible are assets that you can touch and hold. Intangible are assets that you cannot touch and hold. Things like software. Software you cannot touch or hold, but you can move a software from being used in a certain location to a certain location. And when you perform some exercises around amortization, the lifespan of that particular intangible asset is very vital, because we use a formula to amortize, and then the vital element of that formula is the lifespan of that intangible asset. That's what we use when we amortize, basically. I hope that is clear in terms of difference between tangible and intangible assets. That's how it works. Now let's talk about depreciation and amortization. What is depreciation? When you depreciate an asset, it's like, we know very well that when you buy this car from a dealership, you're going to use it. And as you use it, there's something called tear and wear on a vehicle. Not only applying on vehicles, tear and wear can apply on many other things. Tear and wear applies when an asset is being used, it's being utilized. So, excuse me, it gets older, it deteriorates in terms of lifespan, and that is the asset becoming depreciated. Understand? So on your asset register, sometimes when you do your validation or verification of the assets, you also depreciate such assets. So you look at the purchased amount or purchase value, and then you depreciate according to how much percentage your business depreciates your assets, and you'll be able to depreciate that asset. If you bought these assets for 1,000 rands, and then you'll be able to depreciate it to 980 rands. Every year you depreciate these assets. Every year eventually, when these assets reach end of life, it will worth, your asset register will show you how much this asset worth. That's the purpose of depreciation. You can't keep your assets at the same value as you procured it, as you purchased it. It has to be depreciated. As and when you depreciate, the value goes down. And that's the entire purpose of, I'll tell you why we depreciate after this. So everything that I'm explaining is things that I'm basically going to touch base on, just so that I can cover you with your questions and stuff like that. So amortization, on the other hand, like I said, we amortize. Just take the same concept of depreciation and apply it on intangible assets. So depreciation is being applied on tangible assets. Amortization is applied on intangible assets. Like I said, we use a specific formula when we amortize. That formula has a vital element on that formula, which is a lifespan of that intangible asset. So mostly the IPs will run for 10 years. Then we know in 10 years' time, this IP will be done, will be finished. It's going to have to replace it with, it's going to have to be replaced with something else, or a new IP or something. And then we use that formula to amortize. Then it will be able to tell us how much this particular IP worth or this particular intangible asset worth. That's the difference between depreciation and amortization. Do you understand, right? Yeah. So let's go to the next. So the next one in this instance, it's going to be asset scraping. I don't know the other word for scraping an asset. If there's anyone who knows the word that they use to scrape assets, I know it as asset scraping or scraping the asset. Asset scraping or salvaging or recovering from a particular asset. So when the asset reach end of life, we no longer need this asset. It's old, has deteriorated, the asset is torn and worn out, and we replace that asset with a new one. So that process has to go through the asset scraping. So when we replace the asset, we don't just buy a new one and it's done. We register the new one. No, on the asset register, it must show the status of the asset. If it says active, then it means this asset is still active. If it says scrapped, it means this asset has been scrapped. It's no longer at use or in use. It has reached end of life. And we will take that asset and scrap it. And then we follow the process of scraping the asset. And we normally take those assets, we salvage the remaining value of such assets by selling such assets. When we sell such assets, we recover something from, that's the salvaging part. We recover something from the sales of such assets. Like for example, we retiring most of the assets which are old, like these cups, and then we go sell them somewhere in an auction. The money that we make is us recovering something from those assets. We have salvaged something from those assets. That's the process of asset management. And then we need to also know and understand that in your entities, we must develop asset management policies. So your asset management policy should talk to how assets are being managed in your business. So you don't just manage assets in the dark. There must be a driving force or a guideline that drives or guides you as an entity on how the assets should be managed. All these things that I've mentioned should be on your policy as well as a standard. So you should have an asset management policy as well as asset management standard. A standard and a policy is more like the same things, but a standard is a guideline, like a detailed guideline that tells you in details on how your assets should be managed, or on what should be included on the asset register, and so on and so forth. The policy is just a summary of how assets should be managed, just a summary. And then standard, it's a detailed. A standard could be a book, but a policy can be one page, like one page. That's the difference, you know. So those are the things that we need to be aware of, that we need to understand, and they're very important for us to understand. So do not take them for granted and think it's things that you're not going to use, your business is not going to use. You need to understand those things and how they work. And then there's also something that we also need to understand, that there's certain assets which are critical, are being classed under critical assets. So on your asset register, you must also have as a column for critical asset. If the asset is a critical asset, you must state yes or no. So critical assets are assets that are adding so much value to the business that if this asset goes out of service, it's going to impact on your production, it's going to impact on your revenue, and so on and so forth. And critical assets are being managed as such, and they should be given priority. And these critical assets need what they call asset reliability management. Assets reliability management. Yeah. So you manage the reliability capabilities of this asset. You know. So you know that this asset, if it's managed in this format, in this form, in this way, in this fashion, it will be reliable to us as a business for our production. So you need to monitor its reliability so that you know that this asset is reliable for the next 6 months. It will be reliable for the next 12 months. It will be reliable for the next 5 years. We will be able to still use this asset fully be on production as a result of this asset working optimally, So we need to understand such thing and understand how they work. And this is going to assist us to manage our ROI through this particular asset, through these critical assets, because ROI depends on how much or how available this asset is. So if the asset is most of the time not available, it's frequently out of service, it affects your ROI. If the asset is fully available every day, every week, every month for 5 years, your ROI will be realized as planned, And ROI is return on investment. So this asset adds value to the business by giving you return on investment. Say, for example, this is a motor that pumps water into the tank for you to water the crops so that you can produce jam, you can produce dried fruits and stuff like that. It's your business. And you bought the motor, you bought a second-hand motor. And the motor, when you bought the motor was perhaps 4 years old. And the lifespan of the motor is 5 years. So you are only left with 1 year on this motor. So you need to manage the reliability of that motor. How reliable is this motor? So if this motor goes out of service more frequently, it's going to affect the investment that you have made in buying that motor. So your return on that investment, the motor is the investment. So the return on that investment is going to be affected. It's ROI, return on investment. And then there's something called running your assets into destruction. Running your assets into destruction means you have planned not to replace this asset. Not to repair this asset. It's maybe one of the reliability or critical assets. So you have planned not to repair this critical asset, to repair. But the money that you were going to use to repair this particular asset, you will use to buy a new asset to replace this particular asset. So you have decided as a business that we're not going to repair this asset, but replace it. So if that is the decision made by you, maybe as a management, that we're not going to repair, but replace, then you can run that asset to destruction. You can run it until it burns out. It's fine. Then once it burns out, you remove it, you put in a new asset. Then you can salvage whatever that is left from that asset. That is also another option that a business can take to save its cost in terms of repairs of assets, especially on critical assets. Critical assets are very critical and they need a very close monitoring and management in terms of reliability for production purposes. No. Yeah. So lastly, check out the support program that is out and available and open, called GCIP South Africa. I think it's going to be open for the next 2 months or so. I'm just not sure of the deadline or the closing date, and apply. GCIP is Global Clean Tech Innovation Program, South Africa. They're looking for clean tech innovations, and they will be able to assist your business to grow. Clean tech innovation businesses are businesses that are doing biotech, businesses that are doing waste management, green energy and stuff like that. They are looking for such businesses. So check it out and apply. I don't have the link per se. I would give you the link directly. Just go into Google and search GCIP, G for Gloria, C for Charles, I for India, P for program, and dash hyphen, that is it, hyphen, dash SA, South Africa. GCIP dash South Africa. Yeah, just Google that, and then I think it will direct you or redirect you to the link, and then you will find the correct link and apply. You might be lucky and be shortlisted and participate in this. So don't forget to subscribe. There'll be a pop-up here. Just click on the pop-up and click subscribe and be part of this journey so we can interact freely. Until next week, I'll see you again next week. Woo, woo.